and speak a bit more about the structure of the workshop. But yes, my role will be to moderate, to make sure I collect the questions. And if you want to ask anything when the right time comes, just write it in the chat. If we are not too many people, we might give the word directly to you. Devon, do you want to talk a bit about the structure of the workshop?
Cool. Yeah, I'd love to. Hi, everyone. So I'm just going to share my screen with you guys, and you can let me know if you can see it because, standard Zoom practices. That's the wrong screen. Can you see the screen? It's got Linum Labs DeFi 101.
Yeah, we can see it.
Cool. All right. Then to get started, thank you all so much for joining us here today for the DeFi 101 workshop, discussions on decentralized finance. I'm pretty amped to be here again and actually presenting this time on Crypto Mondays. So the DeFi 101 workshop, I think I want to run a little bit differently. So to kind of explain to you guys how this will work, and I've done one of these before, but not online. I've done a crowdsourced kind of content workshop before in person. So to explain to you guys how this works is I want your participation as much as possible. So if you are in the call now, put on your video if you want to participate, try and be a part of this as much as possible because I'd like to try and open source the content. The field is massive and I don't know everything about DeFi. So your opinions, your thoughts, your knowledge, your experience, your input is all incredibly valid here. And how we're going to do this is I would like to use Zoom reactions. So, at the bottom of your Zoom, it says there are reactions. Give me a thumbs up if you can find it, or send through an emoji or anything on the screen so that I can see it come through. Cool. You can see all of yours. Nice. All right. This is good. Claps. Thank you. And then basically every time there's a green box on the screen is when there's going to be audience participation required. And during green box times, I'd like to see your reactions coming through. If you have something that you would really, really like to say out loud, please raise your hand. If you have any opinions, any thoughts, any additional definitions to any of the definitions that I have on screen, I would love to hear them. So then if you raise your hand and I select you, just unmute yourself and we can have a discussion, we can have a conversation around it. And then if you have any questions, maybe save them until the end. There's a question time at the end, but if you have any discussion points or conversational topics or content addition to the presentation, I'd love it if you could raise your hand and participate. Can I actually test out a raised hand? If one of you want to try and raise your hand. It doesn't come up anywhere. Oleg, do you see it on your screen?
Just yes, in the chat. So you have to click actually on participants.
I can't see that when I'm presenting. So maybe if somebody raises their hand while I'm presenting, Oleg, if you could stop me and let me know.
Yeah.
And then we can call on someone.
Okay, we have 3 raised hands. Everyone's testing it now. Good job, everyone. Yes,
cool.
I see
All right.
This
is good. So when we have raised hands, we're going to try and get to you. I'm going to skip over it for now, but the next one, I'm going to keep my presentation not in presentation mode just so that I can see what's coming next on my presentation. So moving ahead to tell you guys a little bit more about my company. My company's name is Linum Labs. We are a blockchain software development studio. This means that we build pretty badass blockchain products for our incredible clients. We build everything in the full product life cycle. So we go through systems architecture, consulting, token engineering, all the way through to Solidity smart contracts development, full stack development, integration with existing apps, as well as designing UI, UX for Web3 applications. We're a global team, so we actually grew with our roots out of Johannesburg, South Africa in 2016. Our team is all over the globe: Cape Town, South Africa, Budapest, London, Miami. Our headquarters are based in Switzerland. And we really are passionate about what we do. Our team fully embodies the open source ethos of the decentralized ecosystem that we grew out of. So moving ahead to tonight's presentation, what we're going to cover in the presentation is what the hell is DeFi? So starting from the ground up, we're going to cover some common terminology. So some of the words that maybe if you've been in the DeFi space, you'll have heard, maybe you haven't before if you've just started learning about it now. We're going to go a little bit deeper into liquidity mining, a little bit deeper into yield farming, and then what to do if you want to get into DeFi. So what are the things to look out for, how you can go about it yourself, what are some of the risks associated with that? And then I want to open up the floor for an open discussion around DeFi, some of the questions that I got prior to the presentation, what you guys want to discuss, and then if there's anything interesting in the news, we can cover that as well. How are we feeling about that? Reactions? Good, good, good. Cool. So this is our first interactive kind of a slide, and it's because I want to get to know you guys a little bit better. I want to understand a little bit more about who is in the audience. So before I continue, who of you have previous experience in DeFi or crypto? Who of you are traders or crypto developers, software engineers? Just react in some sort of a way so that I can kind of gauge how the audience is. Oh, yeah, okay, actually, maybe do that. If you guys have, you should be able to annotate on the slide. Maybe if you have previous experience, do a squiggle. So Kent, if you can maybe show people what a squiggle is. Yeah, like that. Nice. Just do maybe a tick if you've got experience, or a cross if you don't. We're trying out new things, guys. Lockdown is pushing me into uncomfortable places with this lockdown. Okay, who of you have MetaMask, Portis, or any blockchain wallet installed on their laptop? Just give me a tick or some sort of a notice. Or wait, can I actually see this?
Someone's asking if there's a link to this Google Doc.
We don't have a link to the Google Doc, but if you go into the top corner, there's a annotate button. And if you click on annotate, you can stamp a yes or a no. So you can go yes or no.
Inside the view options tab on the top where it says you are viewing Devon Krantz.
Thanks, Kent. So I'm just gonna clear everything quickly. We can start that again. You guys all clear with it? Okay. How many of you have played with Uniswap, liquidity pools, swaps, compounds, anything DeFi before? Okay, I'm just going to start from scratch then. We're going to start right from the beginning, and I'm going to stop the annotation because otherwise people get carried away. How do I actually do that? Okay, cool. Oh no, sorry guys, please bear with me. Okay, cool. So moving on, DeFi is in its most basic form decentralized finance, and it's not necessarily a very new thing. So DeFi started around the same time as crypto did, so 2008, 2009, when Bitcoin was first released. That was the first instance, I guess, of decentralized financial technology that came about. Since then, we've been building a lot on what DeFi is and how it's kind of expanded over the years, and it's starting to now mirror more traditional CeFi, centralized finance, and traditional finance tools in new ways, but with better memes. A couple of examples of this that we're going to run through are lending platforms, decentralized exchanges, stable coins, wrapped Bitcoins, and prediction markets. There's a lot of positives and negatives to what is being built, and in the future it's very difficult to kind of predict how these are going to be used. But because the industry is so fast moving and it's so unusual, it's really weird, which is why I've asked to open source this content and get input from you all. There's so many different aspects to it. There's new protocols every day. Basically, if you miss 3 days of news, you're already 3 weeks behind. For examples, like an entire lifespan of a project now in DeFi can be from start to raising a couple $1 million to nothing is basically 3 days. And that's pretty old for a project these days. So we're discussing this because DeFi is a hot topic at the moment. And if you're working in crypto, even if you haven't been working in crypto, you've probably heard the term. But it is weird. The names are weird. The tech is weird. Everything is fast and uncensored. And it's a little bit back to being about the Wild West because there's so many new projects coming out. My screen is frozen. I just want to check if you guys can hear me.
We can hear you.
Okay, cool. And lastly, because it's risky. This is a very new and untested tech, and there's a lot of really great and cool legitimate projects out there, but there's also a lot of shitty ones, and there's a lot of opportunity for risk or for losing your money or for people being involved in fraud. So what I want to cover, I guess, or what I want to check in on before moving ahead with this, and maybe raising your hands once I'm finished, is why are people talking about this? So for me, it's because the goal of DeFi is to reconstruct the banking system for the whole world in an open and permissionless way. And these two aspects for me are very important: open and permissionless. People now have access to financial tools and financial markets without the restrictive measures that they used to have for traditional finance tools. There's no longer reams of KYC or reams of paperwork. All you really need to connect to these financial tools is an access to a Web3 wallet. Basically, we refer to this as we're building Finance 2.0 on Web 3.0. And we only really get a chance to rebuild entire financial markets like this every 50 years or so. Because of this, there's a lot of money to be made in periods like this, but there's also a lot of money to be lost if you don't know what you're doing, or even if you do know what you're doing, there's still a lot of risk because the technology is so new. And with all of these tools that are being developed, you can never really know how some of the tools that you're building might end up being used in the future, because they are still so novel and there is still so much going on. So maybe I'd like to take a question from 2 or 3 of you. If you can raise your hands, why do you care about DeFi and why do you want to talk about DeFi? So Oleg, if you can help me out with just unmuting anyone.
For raised hands.
I'm sorry, how do you raise hands again?
I
I know you guys mentioned it.
We have a raised hand from Orcs.
Please feel free to unmute yourself and go for it. Tell me why you care about DeFi. Why are you here? Or if we're battling with raised hands, anyone who wants to contribute, just, you know, unmute yourself. I'm ready.
So that person wrote his thoughts about banks and compliance.
Banks and compliance, is that another point about why people are talking about this? Because it's unregulated.
Yeah, that's how I understand it. And then we have one more comment from Paula. I care because it gives access to people around the world to the same tools. And we also have a raised hand from Dominic Duffin. Dominic, you want to unmute yourself?
Hello, everyone. Yeah, I think the kind of biggest reason why I am interested in DeFi is the ability to remove intermediaries who take percentages, even if they're very small percentages, of every single transaction that runs through the economy for not really doing a huge amount of work, in a sense. I mean, I think they do a lot of work, but it's a lot of the work that maybe can be automated away by new technologies. But if we don't move over to some kind of really new system, I suspect that the intermediaries will continue to take the same kind of fees that they've always taken.
Definitely, and that's a really good point. Technology like this is incredibly disruptive, and fees from CeFi or traditional finance can be a lot lower and cross-continental, I guess, than traditional finance. So that's going to start having an impact on our financial system. I think that leads me quite nicely into my next slide, which is actually showing you guys a little bit more of an example about how much money is actually locked up in DeFi at the moment. So it's at the moment when the slide was taken was 12.75 billion is currently locked in DeFi, USD in DeFi. I checked it again actually today, and it's actually now 13.8 or something. So it's already gone up by 1 billion in just a few days. And it's continuing to accelerate at this phenomenal speed, which we're going to start seeing more and more of as it goes. One of my worries with DeFi is that a lot of what we are building now is reliant on a couple of key market players. And we're building this incredibly large infrastructure, or this incredibly large system with all of this power behind it, on largely untrialed and tested frameworks and applications. So a couple of the things that are currently, or we'll talk about these players all a little bit later, but Uniswap, Maker, Wrapped Bitcoin, Compound, and Aave are all very, very major players in the DeFi space. And they all contribute to different DeFi tools. Some of the tools that are currently being created, as we mentioned earlier, are lending platforms, decentralized exchanges, stablecoins, wrapped bitcoins, and prediction markets. So these are all very, very similar to centralized finance, but they're done in a decentralized manner, either removing the middleman or breaking down barriers, doing things in new ways. And through doing that, I would like to touch on some of the companies. So this screenshot was taken of the DeFi ecosystem in 2018, I think it was. And then since then, we've already got so many more players in the market. This is 2019. There's even more now. So there's a lot of companies doing this. It's a very hot topic. Things are changing all of the time. And the ecosystem is just becoming more and more crowded with companies that are currently working on these projects. So starting from the beginning and talking about DeFi in its most basic sense as decentralized finance as opposed to CeFi, centralized finance, traditional finance, and fintech. DeFi is, if we talk about it in the sense of all of these projects in the ecosystem up here, money Legos. And this is probably a term that you guys have heard quite a bit in sense of DeFi tools can just be stacked one on top of another. So Compound on top of Aave, on top of Uniswap. You can connect them in all sorts of weird and wonderful ways to create something completely new, which is both very, very exciting, but also a little bit unsettling when you think about all of the opportunity that is out there and new ways to disrupt the current system. A couple of common terms that you've probably heard as well. Stable coins. So stable coins are crypto that are pegged against an external reference point. So these are things like USDC, US Maker uses DAI. There's a couple of stable coins out there at the moment. Some of them are actually pegged against more stable asset. There's a gold one. I think there's a couple of other ones. CDP, this is your collateralized debt position. Liquidity, the availability of liquid assets to the markets. These are all common terms that you guys are going to hear a little bit more in DeFi. So moving ahead, and these terminologies is where it starts to become a little bit more complicated. So automatic market makers, they're smart contracts that you can buy, sell, and interact with without having to interact with another person. An example of this is the bonding curve that's used in Uniswap. So basically you can use Uniswap to put in Ethereum and get another token out, and that's basically they use the Uniswap bonding curve. Bonding curves are another matter. We actually have Paula on the call who can maybe dive into it a little bit deeper on bonding curves for you. But basically a bonding curve is a type of automatic market maker where the price to buy and sell something is determined by a mathematical formula. And these formulas can change depending on the types of results that you want. Their main aim is to incentivize users' behavior.
Yeah. So yeah, just tacking on that, Paula here. Yeah, you can incentivize using different forms of algorithms. So you can make these algorithms exponential, they can grow linear, they can grow, the price can be a little bit independent of supply. And essentially, you know, what that can incentivize is having traders buy in at different points. So if you make it that it's potentially like logarithmic or a squared graph, if you don't know what that looks like, that increases very quickly in the beginning and then tapers off. And that would basically really reward early investors, and then it would stable out as the project gets more popular and just becomes a lot more stable. And I mean, some questions might be that you know, looks like a pyramid scheme, or like it just goes up or anything like that. But I mean, that's most investments. And I mean, if the project isn't successful and people don't buy it and they just sell the tokens, the price can go back down just as quickly. So it's not a guarantee in any way, but it just helps guide which way these prices may grow and fall, and can incentivize how people interact with it. And it also, they can also be automatic market makers. So they allow for trades to go through immediately without having to pair up a buyer and a seller, which is really good for brand new tokens or more niche tokens. So there's been a lot of applications for bonding curves over the past year or so.
If you guys are interested in taking a deeper dive into bonding curves, we've released a couple of articles on like bonding curve 101s, and I think we're going to be releasing another one quite soon as well, just explaining the basics of the curves. But following on from bonding curves quite nicely is slippage and slippage control.
Very quick question. I'm getting asked by a few people if the slides will be shared after the talk.
Yeah, happy to share the slides with you guys.
Where will you be sharing them?
I can drop them into the Crypto Mondays Telegram. I'll also make the video available to you guys.
Perfect. Thank you so
And then
much.
we're also always available for questions. So like I'm available in the Telegram if you guys want to discuss anything further, or if you have any questions.
So everyone, please join our Crypto Monday Telegram group for that.
Cool. So following on from bonding curves is slippage and slippage control. This is something that you guys, I'm sure, will see if you're converting or if you're doing any swaps. So a lot of bonding curves, you can kind of see the slippage. There's like, what do you want to set the slippage at? 1%, 2%. In a bonding curve, the slippage is predetermined at the exact price, whereas in a free market, although it's predictable, it's less precise than it would be using a bonding curve. Mempool, not mempool, but mempool because it's a contraction of memory and pool, is a cryptocurrency's nodes mechanism for storing information or unconfirmed transactions. This is important when you're looking at liquidity in the sense of front running. So front running is to explain to you guys basically when a transaction is being pushed, somebody can. Sorry. Sorry. Okay. Cool. So front running is basically let's say Bob is trying to push through a transaction and Alice sees that she can try and submit a very, very, very similar transaction at a higher gas price. So it's almost the exact same transaction, but Alice wants to try and push it through at a higher gas price to get it pushed forward further first, so meaning her transaction will get mined before Bob's.
Oh.
Yes,
you guys okay? Sorry.
Please, everyone mute
What's that, darling? Is that curved material, carpet or wood?
Can we mute everyone?
Yeah. No, sweetie, you're so nice.
Cool. I'm just going to keep going with my Alice and Bob explanation. So front running is basically when somebody pushes forward their transaction and before somebody else's in order to make a financial gain off of it. So if I'm trying to buy a token and Bob sees that, or Alice sees that she can try and buy a token at a lower price and then sell it back to me at a higher price, almost within the same transaction, that's called front running. A lot of front running now is actually done automatically using bots, and is also the reason why a lot of people are getting into DeFi at the moment, because there's a lot of money to be made through kind of pushing those transactions around, playing with bonding curves, messing with prices. And a lot of it has to do with the more technical infrastructure of a node and how those transactions are actually pushed forward. If you guys are interested in me maybe diving into a bit more of the like technical terms of what a node is and the type of information that goes through a node, and what front running is, we can touch on that at the end, maybe in like the end section, if you guys want to go into that a bit deeper. Because yeah, these are all kind of like the main components of DeFi and what started DeFi hype, not hype, I don't know, interest, severe interest at the moment. But yeah, so I thought I would kind of transition from this slide with a little bit more complex terminology on it and dive into liquidity mining, because liquidity mining is now the process of, so if we look at like front running, meme pool, slippage, bonding curves, and automatic market makers, it's how people are actually making money, starting to make money off of these DeFi tools. So the process of depositing or lending designated token assets with a mining mechanism to provide liquidity for the product's fund pool and thus obtain an income. So liquidity mining came about because a lot of protocols had a token or a native token, but they didn't have any funding to support their system or their platform or further development. So what they did is they started rewarding people for, if you put in Ether or Bitcoin, or if you put in money into their protocol, they would basically reward you with a free token through an airdrop or through some other mechanism. And then the hope with this is that you would be providing all of this liquidity, they would give you a token, and then this token's incentive basically for you to keep it was either to increase the token's value or to be used as governments on the protocols, on the tokens protocol. So those are kind of the two incentives. And then through this, there's a lot of liquidity that was just automatically generated for a lot of protocols. And this liquidity is freely exchangeable backwards and forth amongst other protocols through swaps, and there's no vesting periods for any of these protocols either, for any of these tokens. So it makes this really unusual kind of ecosystem that we'd never really seen before, where projects were just sprouting up, getting a lot of liquidity, stealing liquidity from other products, and then creating this very, very fast-paced kind of an ecosystem.
Devon, just quick,
Yes.
we're having actually quite a good discussion here in the chat.
Oh, let's actually open it up because green box. So I'd love to hear your guys' thoughts on liquidity mining, what your definitions are, opinions on this. So Oleg, if you'd like to read out the questions, otherwise, if you guys would like unmute yourselves and actually let's have a chat about this, that would be cool.
I blocked unmuting, but I will allow it now, so you'll be
Oh.
able to unmute yourself now. There was just one question right now. What do they do with the liquidity?
So with the liquidity, projects will try and increase the value of their platforms. It's really up to the platform what they choose to do with it. There's a lot of risks with it as well. So a lot of people can, there's an instance of rug pulling, which I'll get into later, but basically you can build up all of this value and liquidity for your protocol. And if at the end of the day, the creator of the contract just decides to like get out with all your cash and it's an unaudited contract with an unknown team, all of your money's kind of gone. I'm sure that there's some other uses as well. So if any of you want to jump in as well, that would be great. Feel free to unmute yourself. I'd love to hear from you.
Well, there are some good discussions on various topics such as front running or flash loans, good, evil, widely used or not, etc. Anyone wants to comment on that now, based on any of the discussions ongoing?
Yeah, some of the earlier ones were like on front running. They were kind of going in between people. And some of the people asked, is it possible to prevent front running? And, you know, is it illegal? Is it, legal? That's
Okay,
kind of
so
the overall discussion goal.
Yeah, front running is not illegal. And to prevent front running, if you really want your transaction mined, it's just like safer to put a higher gas price on it. There's also back running, but I actually don't know enough about the topic to get into back running. Oleg, maybe if you could read out a couple of the thoughts or discussion points.
Yeah, I mean, for example, the latest discussion around flash loans, whether they're a getaway car of DeFi exploit heists, or whether they democratize the exploit because ripping off the market should not just be reserved for whales. So clearly, they don't have a very good reputation here among some of our audience. Do you want to comment on that?
I think flash loans and front running, or like the concept of being able to do that, is it's exploiting just a vulnerability in the system. There was that huge hack a while ago using a flash loan. I can't actually remember the project that was hacked.
I think that was on what is it called, BZ something. There was that one protocol that got hacked already like twice. Is it B? I'll tell you the name in a sec. But the thing is, like, I don't think that negative. BZX.
Yeah, there's actually a good comment here in the chat that I see. If you're close to the miners, you can get your trade in front of the real order. So this is actually another really interesting point. Actually, there's instances now in the mempool where if your transaction is being pushed into the mempool, you can actually try and incentivize the miners directly to mine your transaction over and above others. So that's creating as well like other interesting instances of how people are gamifying the system. And when you think about DeFi in terms of like, it is basically very financial gaming. It's gaming the financial system in new ways.
Question. I've got a question.
Yes, go for it.
Hey, I'm Sam. Nice to meet everyone.
Hey, Sam.
You mentioned about liquidity, and obviously there's a lot of money to be made in these transactions. I noticed on your clipboard you've got like Airbnb and like these cool products that are like real life tangible products. Like, when do you think companies like Airbnb will start accepting cryptocurrencies for their services? Because until then, it's as you say, it's literally just a game. And like, I'm an accountant by trade, and I just think it's really interesting that like Square have kind of bought 50 million worth of Bitcoin, so it's kind of filtering into the financial system, and there's limited guidance on what you say, like it's developing all the time. So there's limited accounting guidance. What is it? Is it cash? Is it investment? And like Airbnb, all these companies that provide great services and tangible services in the real world, they all interact with existing currencies. So let's say Airbnb stopped overnight, said everyone has to transact in cryptocurrency. It'd go bankrupt because you have to re-roll everything out, and not everyone has access to cryptocurrency. So yeah, this is, I guess I wanted to, long way of asking the question, but when do you think this will become normalized and you'll actually start, rather than trading it and using the appreciation in value for cash, you'll actually be interacting with the economy in these tokens?
I think it's a very relevant question. DeFi, I think, is a very while off from being used in real projects at the moment. We saw earlier, I think it was this month or in October, PayPal introducing cryptocurrency. Yeah, that was big news. It pushed up the prices, I mean, everything quite a bit as well. So I mean, it's slowly going to start getting added, but I think while there's still so much regulatory gray zones with the technology, I mean, because the technology is moving at this breakneck speed, and regulation is not that it's against crypto, it's that they're trying to find ways to, I guess, adapt and keep up without completely hampering innovation, but trying to make it safe as well. So things like regulation aren't just there to put a downer on the degens mojo, but also to actually keep users safe, and to keep people from making big decisions. Like, I don't know if you guys remember well, of course you do, the crypto bubble back in 2017, and when that popped, people were mortgaging their houses to buy crypto. We don't want to see that kind of recklessness again. And I think because of that, a lot of bigger companies would be a lot more, I think, hesitant. I'm sure they would be getting into it at some point, but I just don't see it being anything right now until there's more stability in the markets and the technology in the way that things are being done, until more bigger players start diving into it. We saw what happened when Facebook started trying to get into crypto.
Yeah, I think it's interesting that Rishi Sunak released a paper, and like the UK government are basically trying to look into a digital pound, and we're in 2020, and obviously with everything that's gone on, the US government had to mail by paper and check the 1.2k checks to people that needed the support. Like, the tech is there, but it's just not rolled out. And then obviously you're all into data protection, and if the government controls every transaction's auditable, like,
I think it's because of quantitative easing. That's the main reason why they don't want to do anything towards using, we've got all these stable tokens and everything, and US dollar tethers, and there's lots of different reserve banks that have tried to implement it, but I think it always comes down to quantitative easing. They won't be able to do it properly.
Sure.
One question that was asked in the chat: is it technically possible to prevent front running in DeFi?
Yes, I mean, if you go straight to the miner, you get them to mine your transaction regardless of what happens with the fees. That is one we discussed briefly. That is one of the loopholes. Otherwise, putting a ridiculously high gas fee on it. There's been a couple of instances where the transaction fee on the Ethereum network was super high. I can't remember when it happened, but there was a couple of people that pushed through transactions that with ridiculously high gas prices. I don't know if that was just to test it. Does anyone in the audience actually know any more about that transaction fees, or actually preventing front running?
No sign from anyone.
Okay. I'm gonna jump ahead to yield farming, just so that I can keep the flow up, but we can also keep the questions coming, which will be cool. I've got the chat open on the side now, so I can see you guys chatting, which is cool. All right, so yeah, liquidity mining, and then yield mining. Yield farming is basically liquidity mining with extra steps. So it's the process of putting crypto tokens to productive use in DeFi market to earn interest. So this is basically you'll hop onto a token or a protocol and put in some liquidity, and they'll give you a token, and you'll use that token, you'll put into a different protocol to get their token, and then basically create this long and creative chain of what combination of protocols gaining interest will give me the best return on my investment. And this can be done either through transaction fees, token rewards, or capital growth of the actual token itself. So I'd love to, are any of you guys actually yield farmers, or have you been involved in yield farming? Because there's some pretty colorful terminology that has come out of something like that. So if I actually hop across to my next slide now, if you guys want to jump in, like, feel free to jump in at any time. So this is my more slangy type definition slide. Degenerates. So these are people that are not necessarily technical people involved in DeFi. Then there's DeFi chats, which is why I put that meme in there. Those are the people that are, they'll just hop across to any kind of fun DeFi project. They'll invest millions into a completely unaudited contract, farm 1,000 yields on an unaudited platform. Yeah, so DeFi chats.
One anecdote on that. I have some friends who are like pretty high ranked poker players, like they play at some of the Las Vegas World Cup competitions, etc. They totally got into the whole yield farming, and they figured out the Ethereum wallet of like a really high profile figure in the space, and they literally just see what he does with his wallet, and they just follow it. Like they don't even care. They don't even know what they see.
Yeah.
He sends funds into a smart contract, and they follow him.
DJ Chad, yeah. What's it, Ricked? Sorry, just saw that comment, made me laugh.
Sorry guys,
Cool.
can I say something?
Yeah, go for it.
Hi, I'm Theo. It's my first time here.
Hey Theo, welcome to Crypto Mondays.
Yeah, I've been on the group for a very, very long time, but I've never, logged on to what's happening here. So I've heard about DeFi, but I think the technology is too early to jump on. So I'm waiting for people to make mistake. Like basically, they should be like the guinea pig. So let's see what's happening with this space, and then if it's more stable, then I can get into it. So that's my own opinion on DeFi. And
yeah. There's
also,
actually a comment by Vitalik Buterin actually commented on DeFi, just saying like, even if you're in the crypto space, like don't feel pressured to get into DeFi if you're not ready. Don't feel pressured to get into liquidity mining or yield farming. If you don't know what's going on, sit back and like it'll slowly start finding its place in the system. It'll start becoming more user friendly. Like at the moment, it's still very, what the hell is going on? And it can be quite overwhelming.
Yeah, I think you're right, because the reason why I said I'm gonna relax and step back was because when I started hearing, for example, about Bitcoin, so I got in very high, and then the market just went down. It's not until now, it took me like 3 years before I could actually get my initial investment that I put into Bitcoin back. And that's why I said for now I'm not just rushing. I'll listen, I'll study about it, and then when I'm ready, I'll jump into it.
Yeah, I think it's important to not overextend yourself. There's a quote here in the chat. DeFi is like quantum computing. If you think you understand it, then you probably don't.
Yeah,
I thought that was quite a funny one. I definitely don't know everything about DeFi. So I'm happy to have your guys' like contributions on all of this. I just kind of spend a lot of time on Twitter. So running through a couple of the last three definitions on this presentation actually. So liquidity locus, kind of same as DeFi chads, just following the biggest liquidity mining rewards in the hopes of making some returns and finding greener pastures in different protocols. So these people will just like hop between different protocols, see what they can get in tokens without actually understanding the protocol, the project, the code, what's actually going on. Rug pulls is one of the risks, which I think we'll discuss in the next slide. So basically a DeFi project will get tons of liquidity really quickly and then just disappear. Crop rotations. So this is like a move in yield farming where a yield farmer will basically, because they've got all of their tokens wrapped in these crazy protocols, they'll decide, nope, they're going to do a crop rotation and undo this complicated creation that they've now got all of their tokens in and redo it in one that they think is more profitable. Do we have any comments on this slide before I move ahead?
I don't see anything currently in the chat, but if anyone has any questions. Cool. There is a question in terms of whether Binance launch pool is a safer place to start.
I'm not sure.
Yeah, it's not really DeFi, right? So it's kind of a question of in what context is it a safer place to start?
In the 2 slides from now, we have kind of like a what do you look for, like safe places to start, like how can you get into DeFi? So maybe we can touch on that then. Best place to start is Satoshi white paper. Yeah, don't trust, verify. Cool. So what are the risks of DeFi? I've got 3 here, but I'd love to actually get more input on here. So what are the risks? Hacks, no matter how good the audit is, a product can still get hacked. Rug pulls, I'm gonna run you through quickly like the sushi swap instance. I think it was sushi swap that it happened with. Chef Nomi. Was it Chef Nomi?
Yeah.
So basically they got like 40 million or something in liquidity, and then Chef Nomi just pulled everything out and disappeared. And I think he felt bad and came back, and then the community actually felt bad and rewarded him with $4 million or something. And that all happened in 3 days. Like that entire movement. It was ridiculously fast. And I remember blinking and being like, what the hell? So rug pulls, bad audits. So even if a product is audited, it doesn't mean that the audit is good. So like knowing what to look for in an audit is very, very important. An example, like I have some examples of good audits and good auditing firms on the next page. And Paula, I think, can actually also jump us through.
I was going to say, I mean, first it's looking at the quality of the auditor itself. There is, a couple gold standard auditors, Trail of Bits, QuantStamp, a couple more. And then, as the reputation goes down, the quality of the security of the audit obviously goes down with that too. You also, when you're investing, you should probably look at, and if you want to be a smart investor, not only if they were audited, but how was the quality of the audit. It's the code that's brought out is only as good as the code that was put in. So one of the more famous hacks was still audited. But if you look between the lines of the audit's feedback was basically that the code didn't compile. And so, yes, they fixed the audit's feedback and they compiled the code. But at the end of the day, that didn't check any of the security issues, because the only feedback was your code is literally not running. So you need to look in between the lines to make sure that these things are up to quality. And, as far as the hacks and the rug pulls, those things do, while not guaranteed, they do get lowered with good audits. So even coming back to her Devon Chef Nomi Uniswap example, it wasn't audited, but had it been audited, the community would have been able to see that Chef Nomi could kind of arbitrarily drain the dev pool fund, that held millions of dollars. He didn't need a reason. He could just clearly just take it out. So that left a lot of vulnerability. So when he decided to clear it, he could. I guess in the end, it was good that he felt bad, but he was an alias. He could have just disappeared. So it's just being smart with seeing what's behind the project and how these things have been secured.
Yeah, I also think it's like even when a contract is unaudited, and I think Meme was probably one of those that wasn't audited, and they very clearly advertise on their protocol like, this is unaudited, use at your own risk, and people still throw in thousands at it or millions, and I'm just like, cool, you do you. So like just being aware of what you're getting yourself into or what you don't know could help. Is there any other risks that you guys I'd like for you to like throw out there? You can drop them in the chat and I'll read them out, or you can unmute yourself. Any other examples?
I mean, there is impermanent loss if you act as a liquidity provider on like some of the AMMs on like Uniswap, etc. So basically, if I understand it correctly, it's a tricky concept, but if I understand correctly, basically when you're a liquidity provider, you provide, let's say for an Ethereum wrapped BTC pool, you provide both sides of the equation, so both coins, but then, and you get rewarded for that. But then if one of them loses a lot of value, you end up basically with what's called an impermanent loss.
I haven't heard that one actually, but that's cool. Impermanent loss.
Yeah, impermanent is a big thing, and it's the name is misleading, so it can be totally permanent.
Yeah,
I don't even know, how do you spell impermanent? Kind of defeats the purpose of the word. Permanent loss. You guys are helping me update my slides as I go. All right, so what to look out for? How can you actually get started in DeFi? Look for teams, good teams with real people behind them. I don't know if you guys have seen, I didn't put the meme in here, but there's that one project that has basically the same guy in 3 different outfits with 3 different hairstyles trying to push himself as this diverse team with crazy background. No, dude. Don't trust these sources, like verify them for yourself. There was a comment earlier in there basically saying like the best way to get started is by reading Satoshi's paper from 2008. Yeah, it's a while back, but I mean, like, this stuff generally isn't completely safe for the general public to be using at the moment because it's so untrialed and tested and new, and there's so much changing every day. Don't put in more than you're willing to lose. This has been like my golden rule for crypto since day one. And it's still true today. Any of these protocols, any of these systems, Ethereum could go down tomorrow. It won't, I hope, but touch wood. But I mean, these are also like possibilities in this very, very novel financial system that we're kind of creating at the moment. Because even audited systems, tried and tested systems, they can still get hacked and they still can fail. So there's a couple of comments here I actually want to read out, I guess. Biggest risk is coding, errors, bugs, audits do not find functional errors. Okay, so I understand the philosophy behind DeFi, but seems like a load of people just want to manipulate for personal gain rather than build an ecosystem that can be trusted. I think that's definitely true. I think a lot of the people involved in DeFi right now are the degen chads, are the liquidity locusts. They're people that are looking to make a quick buck. So I guess it's also, I've got here like some really good people to follow if you are interested in getting into DeFi or staying up to date on DeFi. There's Devon, DeFi Pulse, DeFi Dad, CoinGecko, Evan Van Ness, Spencer Noon, and Cami Russo. There's a couple of like the top 7 that I could just find off the top of my Twitter feed that if you guys want to like stay informed and stay up to date with, I can heavily recommend that you guys as well do your own reading on it, do your own research into it. I think one of the biggest risks with people as well is they'll just FOMO on something and they're like, oh, did you see that token's pumping? And then like they'll put in money and then it crashes or it gets rug pulled or something happens. So I mean, there's all of those risks as well.
I'm not sure I understand.
Sorry, my Siri just picked something up.
One thing I would add about in terms of the risks and scam potential, just my personal thoughts, but obviously a lot of people like tend to see kind of the bad and the negative and the risk, and obviously there's a huge amount of terrible things happening, but it's basically the Wild West, and you know, you can't judge like a super immature market that basically literally just emerged with the same standards we judge, you know, our financial system that has had, you know, 50 years to mature and be regulated and, you know, get consumer protection, etc. I think what for me far outweighs the potential risks is the beauty of this composability and financial innovation. Instead of just having, you know, some hedge fund quant PhDs coming up with financial innovation and building new products, you suddenly can have a kid in, I don't know, in Kenya or in Brazil, build some new financial instrument or financial protocol. And yeah, of course, a lot of people will lose money, but a lot of people lose money also in the current system. The speed of innovation will change fundamentally. The possibility of people who previously weren't able to contribute in any way to finance to suddenly contribute to finance completely outweighs for me any kind of, let's say, the, you know, whatever nonsense is happening there. And one other factor that I also really like, it's actually fun. DeFi is fun. Like, it feels like a game. And people are like, especially, you know, the traditional finance guys, they obviously hate it because they like things to be serious and complex and inaccessible. But actually that doesn't have to be like that. Like, if you make things fun, you get more people involved with it who previously wouldn't get involved with it. And I don't think that's a bug. I think that's a feature.
I think that's another very interesting side of this whole DeFi movement and the weird DeFi and the strange names. Like, no one who's currently building on it, I think, well, not no one, but a lot of the people that are currently working in DeFi and building DeFi product, if we look at Yam, if we look at Meme, if we look at Sushi, they're really just taking the piss of the traditional finance system a lot of the time while they're trying to like build new and exciting ways to do the same old traditional stuff. So if you go into it with the mentality of this is an experiment, we're trying this out, we're trying to build new things, and we're gonna maybe make some money or maybe lose all your money at the same time, like you never know more than you're willing to lose, but at the same time you're helping create a new system. And I think with that I'd like to move into the discussion section. So now like I have two questions that were kind of brought forward from just like question time. And then I'd love to run through any of your guys' thoughts as well. So like now is the time that you can unmute yourselves, ask questions, and like I really want to get a discussion going for the last half hour of this presentation.
I'm seeing in the chat there's now a lot of discussion specifically around also the regulatory environment, whether regulators will step in and impose limits, but also if they will be able actually to do that or not, which is, I think, the kind of big question mark here.
Yeah, I think so. So the SEC is trying to impose like regulations to a large degree because this is very troublesome, I guess, for a lot of places. Different governments are trying it in different ways. If you look at the Swiss government, for example, they're not building new laws to accommodate for crypto or for blockchain. They're basically adjusting old financial laws to include provisions for crypto terminology or crypto advancements. And they actually have like a really knowledgeable government segment that's working on it. If you look at the SEC as well, I think it's someone from the CFTC, Financial Trade something commission, also recently released like who is kind of responsible for these new technologies. Is it the core developers? Is it the users? Is it the software engineers that are building this technology? And they actually ended up rooting out all of the other four people. So like the core developers, yes, they created it, but they're actually no longer liable for if something goes wrong. Users, you can always try and pin down a user for using a system for like malintent or for the wrong gain. But at the end of the day, like software engineers that maybe don't have any foresight into what they're building can be held liable for releasing a project into the wild that then gets used in a malicious way. So I think that regulation is trying to keep up, but regulation moves so slowly compared to the pace at which DeFi is innovating that it's, for the time being, almost impossible to regulate to the degree that you would need to keep people in it. Gary, I see you commenting quite a bit. I'd love to actually like chat with you if you'd like to speak out.
If not, we also have a raised hand from Dimitri. So Dimitri, if you want to speak.
Yeah, hi guys. I'm quite new in this area, and I'm just trying to understand if we can use DeFi and smart contracts in real life. And what I don't understand, the main question I have, as far as I understand, we can't use real fiat for payment using DeFi. We should use something like Ethereum or BTC to make a payment. Am I right?
Well, you can use stable currencies like DAI, for example, USDC, or something pegged against a more stable.
Yes, this is the point. So I was right saying that we can't use fiat. Maybe it makes sense, but at the same time, if I work with real customers, I can't push them to buy a cryptocurrency or a stable coin. And it's going to be a problem for me to work with different customers and asking them to have a wallet and move their real money, real fiat, exchange them to something they're not sure about. So my question is how to overcome this challenge. Do you see any ways how we're going to move forward in this case?
Yeah, so there's a comment actually by Dan Mack in the group that I think is quite relevant, because on-ramps and off-ramps are basically what you're talking about now. So fiat to crypto, crypto back to fiat. Those are regulatory kind of hotspots where you need to keep an eye on what you're actually doing, because know your customer. In that sense, that's why exchanges are so heavily regulated, because it's taking traditional fiat money and putting it into crypto and then potentially putting it back again, which there is that barrier to entry then, which you can see. So like a lot of people won't trust, like for example, MetaMask, or they won't trust one of the other common ones that people use, Coinbase. And like getting into the DeFi world is just a little bit too much of a jump from their normal like fiat payments. But then you see wallets like, for example, Portus, who's making it really, really, really easy to just integrate crypto on-ramps and off-ramps into your Web3 project, so that it almost becomes like a PayPal transaction or something similar kind of a transaction. So the barriers to entry are getting lower, but there is still always that learning curve that people are battling with.
So literally what you're saying, so as far as I understand you right, so you have a site, you have a web interface, and you have a cryptocurrency at the background. So the real customers, they don't need to know about cryptocurrency at all. They just use this web, pay real money, and then the transfer is made through cryptocurrency system. I mean, the Ethereum or whatever it is inside, and it works in this way. This is what you're saying.
It depends on what you want the customers to be using the token for, I guess.
In my real case, it just really just make payment between two peer-to-peer nodes. So let's say the nature of business I have, it's receivables, if you know what's that. So in this case, I'm looking for an automation in the system. So you have a buyer, you have a supplier, and you have a kind of a middleman who would be able to give money, to invest money. And therefore, you just need to make literally two transactions. And I'm looking for a system, reliable system that can be used for automation. And at this stage, I still don't see how can I do that, if I can do this with DeFi. It's still not clear for me.
So no, it is clear. It is clear. So like building payment systems like that and to make them kind of user friendly, I still think without explaining the concept of your private keys and public keys and getting people to understand why that seed phrase is so important, without giving permission to another third party, where it's again the problem of centralization versus decentralization. It becomes again like a learning curve kind of a thing. So I'm sure it'll be something that maybe will become easier to the general public. But in the meantime, so there are easy tools at the moment. I don't know if you guys have heard of MoonPay. It's one of our integration partners that we work with quite often. They make it very, very easy to get from basically fiat to crypto. And then with our applications, we basically pull in a lot of different plugins and different projects that are working together to make the process a little bit easier. If you'd like, I'll hop on a quick chat with you afterwards, and we can maybe walk through your example to understand a bit better.
Yeah, maybe. Yeah, I'll contact you later on.
Thanks. And, Gary very kindly shared some really interesting links in terms of regulations. Gary, actually, if you don't mind, would you like to post that also on Telegram? I think some people would happily read this later on.
And to everyone that needs to jump off already, like thanks so much for joining. I see that there is a comment saying that it's still too high above, like too much of a learning curve. Do you guys want me to backpedal a little bit and maybe explain some easier concepts, or if there's anything you guys still have questions around, like I'm happy to dial it back a little bit or to help out and maybe re-explaining things in a different way.
I think that would be good. I think that would be good. Maybe just point out some places people can go for very simple introductions or first steps, or to read or watch and learn.
There's some, okay, what I can do maybe after this presentation, if you guys want, is I can put together a list of like resources that we use, or that I've used before, or I can put together like a DeFi 101, even simpler than this article for you guys.
Yeah. So I can see 3 Crypto Mondays groups in Telegram. Which one is Crypto Mondays VR?
It's Crypto Mondays London is this one.
The link is in the chat if you scroll up.
Okay, thank you.
Just one resource to share that really helped me massively to understand the different things in DeFi. It's called DeFi Weekly. It's a YouTube channel, and the person running it produces like really, really good explainer, like very short 9 to 15 minute long explainer videos, like what is DeFi, what are stable coins, understanding flash loans, but then also it goes into the separate protocols, like how does Curve work, how does Compound work, how does Synthetics work, and so on.
Yeah, actually understanding maybe the actual DeFi projects in this space might be a better way of explaining DeFi as a whole. I'm sorry, guys, I tried to, I guess, explain it simply, but I guess because I've been in this space for a while, I don't realize where the starting point is. So I'm happy to try and maybe release a couple of resources explaining things even more simply than I have now. Because I'd love to be able to like enable you guys to do that. Maybe a different way of doing it as well is through actually getting you guys to do it. So like maybe we could run through like getting MetaMask on your Google Chrome or using Uniswap. We'll do like a step-by-step kind of a thing. I don't know if we have time now. We could probably try now if you guys want.
Devon, can I ask you a question?
Yeah, sure, Caitlin.
I just want to maybe talk about like wrapped tokens, because you were kind of talking about wrapped Bitcoin. Can you sort of explain like I guess the benefit? I understand that it allows you to use the Ethereum network, but yeah, maybe just some more.
Sure. So I mean, the idea of a wrapped token is, for example, if we take like the wrapped Bitcoin, it's basically taking Bitcoin, wrapping it onto the Ethereum blockchain, and then giving it all of the functionality that Ethereum has with the blockchain, with the Bitcoin, either through a smart contract or a one-to-one kind of backing with the initial asset. And this is mainly just to add like some sense of programmability to it, because I don't know if you've ever heard that comparison of blockchain is like a calculator and Ethereum is like a smartphone. Because Bitcoin can do the simple like adding, subtraction, send money this, receive money, but Ethereum can do so much more. Like you can actually build like that other layer on top of it. I know Bitcoin is programmable to some degree, but Ethereum is definitely more usable in what you can actually do with it. So taking something like wrapped Bitcoin and being able to like add further functionality to it, loaning, borrowing, sending, there's all of the different DeFi tools that then open up to that token. If someone has a better explanation as well, I'd love to have some input on that one, because I'm actually not as well versed in that topic as I should be.
There's one really good question that just came up in terms of where's the trustlessness in the wrapped coin?
I think it's in the code again. So like the wrapped coin is down to the people that create it, or to the code that runs on it. I had this discussion with my team as well a while ago. So once a week we kind of do lean coffees with our team where we discuss new topics in the space, and how do you know what can be trusted and what is trustless, and how, if you're not a developer, can you trust a contract that you haven't written or can't understand, and kind of where does that trust stop, where you need to trust yourself and your knowledge of the token as well.
Yeah, just maybe to add one small thing to that, it's actually quite an interesting point. Most of the Bitcoin that are wrapped on Ethereum, they are not actually trustless. They are held by BitGo. So basically what BitGo does is you deposit them with BitGo and then you get wrapped Bitcoin on Ethereum. But that's of course trusted. Now, there are a few platforms that have been coming up with ways to do trustless BTC on Ethereum. I think there's something called TBTC from Keep Network. But as a disclaimer, I haven't used it myself, so I'm not that closely familiar with that.
Does anyone in the audience know maybe a little bit more about wrapping tokens?
I've shared one link. So Bankless, it's a really good blog about anything DeFi that I follow. So they had an article about trustless BTC.
Lavinia, I see that you know a little bit about wrapped tokens. If you want to pop on your mic and tell us a little bit more about your experience with them.
Lavinia?
Otherwise, if we have anyone else as well. Oh, if you wanted to share more. Sorry, Will. Okay. Anyone else maybe have anything to contribute to this one? Or any other questions or any other thoughts? Where do you guys kind of feel like DeFi is going? I feel like the hype is not as big as it was maybe like a month ago. Because kind of with our clients and the projects that we get, everyone is asking for DeFi now. It's kind of slowing out a little bit. people are like calming down a little bit more, getting back to building dApps, getting back to building other things. It's not just DeFi centric.
Hi, Devon. Can I just ask you a question? It's Jason Dean here.
Hi, Jason. Yeah, feel free.
Yes, my first time here, invited by Lou, actually. No video today, unfortunately. I normally have it on, but for some reason it's fighting me, so just, you can't see me today. I mean, I've been in the space for a little while. Obviously, I was there at the time when the ICOs went crazy in 17 and 18. And then, I don't know if you remember, we had this kind of brief phase with master nodes. That was the big thing. There was a lot of 1,000, 2,000% sort of, returns on this completely ridiculous, unsustainable numbers. Of course, a lot of all of these things, as we know, sort of collapsed, and from the dust became the few projects that kind of survived and went forward. I mean, do you see DeFi going exactly the same way, following that exact model that we've already seen for the last couple of years?
I kind of do see similar echoes. So I got here actually like a fear of the 2017 ICO bubble. I don't think it's going to be as bad as it was the first time around. I'm hoping people have maybe learned from the last pop. But there's always people that are new, people that are going to do it again. I think that there are going to be hundreds of new projects coming up out of nowhere over the next few months. And I think that, as you mentioned, there are going to be a couple of kind of solid ones that end up making it through. Your camera's on. Hi. Yeah, so I do think that there is going to be a couple of top players. So like if I jump back to my slide here where we can kind of see the top players in the market at the moment: Uniswap, Maker, Wrap, Bitcoin, Compound, and Aave. Like those are the leading players in the market at the moment, but that could very, very easily change. A couple of weeks ago, Uniswap lost 60% of their liquidity to SushiSwap. So I mean, like all of these things, they're money leggers. They're just things built upon things. Something built upon Compound, Aave, and Maker might show up tomorrow and completely take over the market. So it's one of those things that I think it'll eventually stabilize, but until then, I do think it's going to be a little bit like 1,000% returns on some things, negative returns on other things.
Okay,
I don't know. What are your opinions? Where do you kind of see it going?
Well, my area is Bitcoin, and it's a subject I know inside out, and have been talking and writing and presenting about for a long time. But I still don't get DeFi at all. For some reason, I just can't seem to get my head around it, which is why I'm here. And I have to say, you have helped a little bit, but all it's done really so far is confirm that I nowhere near know enough to even go near touching any of this stuff. And I don't know if that's normal or there's something wrong with me, frankly. So at the moment, the whole thing just seems far too scary and far too messy to really start playing with. It's just my view right now, but I'm trying to learn it.
I think a lot of people feel the way that you do. I think that it is still like, I'm still, sometimes I'll see something like, and I have no idea what it is. And then I spend the next few hours researching, and I still have to ask someone from my team to explain it to me. And there's some people that just, the degens and some of the developers in my team, they'll come and they'll rattle off to me about everything that's going on. And I just like speaking another language sometimes. So, I mean, I think it is normal to feel like a little bit overwhelmed. I mentioned earlier as well, a quote by Vitalik, and he's saying, if you're not comfortable with it right now, it's okay to like sit back and wait for it to normalize. Don't let the FOMO make you do things that you're uncomfortable with.
Okay, thanks, Devon. I really appreciate that.
What are some of your other opinions? Anyone else on the chat as well? So same question out to you guys. What do you kind of feel like with in terms of like, are you comfortable with DeFi? What do you think will make it feel better? Like, do you feel like it's got echoes of the 2017 hype?
I would say just on the main difference, I think it's far too complex for the regular retail to join. I mean, 2017 was very much driven by just like people going crazy and buying Bitcoin and Ethereum on Coinbase. DeFi is much more complex. Like, wow, where do you even start? So I think we're still a long way to go before we have anything like 2017. There was actually an interesting question from Paul Marinan. Paul, do you want to ask it if you're here, or otherwise I can read it out? The question was, is DeFi not just a form of crypto banking whereby to project developers can build in transaction costs so that they profit off the activity on the platforms? The way I understand it, basically, whether it's not just some form of like new type of ICO. What do you think, Devon?
I think that, so I don't think DeFi is just crypto banking. I think that traditional finance tools are being very heavily mirrored by DeFi, and now it's not just banking, but I mean, there's lending, there's borrowing, there's exchanges, there's leveraging of assets. But I think some of these platforms are using it kind of to add fees to and do differently to banks. But at the same time, a lot of these fees are still significantly lower than what banks would charge you. But that's also just my opinion on it. So Paul, I don't know if you're on the chat. I'd love to hear what your opinions on it is actually.
On DeFi
Hey.
and oh, wait, you said Paula, right?
Oh, Paul.
Oh.
But Paula, you're welcome to
No,
throw in
carry on,
some
Paula.
comments on here. Basically, is DeFi just a form of crypto banking? Because for me, it's like a wider ecosystem of like finance 2.0.
Yeah, but to be honest, I was chatting to the guys that were involved at Cello. I'm not sure if you're familiar with them. They're
Sorry,
looking
who?
to Cello.
Yeah,
Cello
I've heard of
is, yeah, they're basically trying to do something similar to Libra, but on a lower budget, bringing crypto to developing regions. And they were basically trying to incorporate DeFi into their platform. They're basically saying that, as you point out, the actual tools and the are based just bank are tailored to the crypto economy, more appealing than the banking sector.
My signal cut out there quite a bit.
I think it kind of goes against the whole super and the whole idea of sorry. I'm actually out in the mountains in Colorado at the moment. So
yeah, I think it's Paul's signal actually.
If you don't mind to just write in the chat, I can read it out.
Okay, yeah, but
I think I got.
did you
yeah, I
get
got
the point
pieces
about?
of it.
Basically, my point is that the idea of white paper.
No, this
Okay,
is
Paul, unfortunately, I'm going to have to ask if you can please
tracking.
drop it in the chat because the signal's cutting out a little bit too much for me to be able to hear.
I think people are slowly.
Yeah, people are guys. Maybe to help me for my article or for like next resources, because this was still maybe a little bit too advanced still. What would you like to start with next time? Like, how can I make this easier? Does anyone have any thoughts or comments on it? Last 10 minutes, maybe how we can improve this. What did you guys think of the workshop style?
I liked the open communication.
Feedback for next time. Should we try more workshops? I know it was a little bit longer. It's a little bit harder to pay attention for so long.
I think we should do more workshops. I really enjoyed it. I like the engagement as well.
Yeah, maybe we could like find a way to like, I still want to simplify this topic for people. It was supposed to be DeFi 101. Sorry.
Maybe,
Quite a few people are in the chat saying they liked it, by the way.
Cool.
Yeah. No, I think it was great. I think it was a fantastic introduction. I would almost focus a bit less on like the terminology and maybe like use one or two like charts or something just to kind of bring that home even more.
Maybe running through actual projects, like getting people to install MetaMask, and then maybe we can like send some fake tokens to wallets and then get them swapped on Uniswap or something. Like maybe we can try and actually do like a real life interaction with DeFi.
That could be very helpful.
Because I know it's always easier once you actually do it yourself than just hear about it. Same way like when we're trying to get people to learn about crypto, when we're training them, we just send them like 0.000 something ether, just so that they can actually see it.
Happy note from Jason there. $17,000 Bitcoin appears imminent.
Yeah, I guess we're kind of coming to the end of our time now. So if you guys have any feedback, or if you have anything that you'd like to like closing thoughts.
Just one last reminder from me. So my company CoinRow is still crowdfunding considers. We are still open for the last few days. So if you're interested, please do check us out on seeders.com/CoinRow. And any questions, obviously, shoot them my way.
Oh, you should can you drop it into the Telegram as well? Because I'd love to see it again.
Yes, I will do that.
Oh, and I guess like closing notes from me as well. Thank you all so much for taking the time to join this presentation. I know it was a little bit longer than our usual presentation slots. If you guys do have any blockchain projects that you want to build or anything that you're considering, our team does a 45-minute free consultation. If you book through our website, and we can like give you some advice or input on your blockchain projects, and then maybe we could even build it for you. And we're also hiring at the moment. So if you're a software engineer and you're looking for a job, we're hiring. Please submit an application. We'd love to hear from you. But yeah, thanks so much. I really actually enjoyed chatting with you guys.
Thank you very much.
Thank you so much.
Devon. It was really interesting. Very well done. I really appreciate it.
Devon, thank you. It was really excellent, and I think everybody really enjoyed it. And I think we need to look at readdressing the subject again and expanding it out and doing a bit more in that area. So thank you everybody for attending. Thanks Oleg for excellent moderation as usual, Caitlin. And we'll see you all probably this time next month. We're looking at maybe doing it a week earlier as it's running into the holidays, but we'll let you know. Keep a lookout on Crypto Mondays London and the Telegram site. Okay.
Thank you, everyone.
If you guys want to like discuss any of the topics or have any questions, feel free to reach out to me on the Telegram or via email or anything. I'm happy to like have coffees or beers with people once COVID gets us. But
Devon, I dropped you a message in LinkedIn if you don't mind.
Well, happy to connect there. My LinkedIn is a bit of a black hole, so
all right. Telegram. I'll try to find you on Telegram.
Cool. All right, guys. Thanks all so much.
Thank you
guys, for letting me speak on Crypto Mondays. Caitlin, Oleg,
Thanks so much.
Thanks,
Bye.
Thank you.
Everyone.
It was fab.
Bye.
Cool. Thanks, everyone. Bye.
Thanks. Bye.
Amazing.